There is data that wasn't meant to be seen. In the last 18 months, something changed. Central banks moved 1,200 tons of gold. Not gradually, frantically. They don't announce this in press releases. They don't explain it on CNBC because gold doesn't speak in words. It speaks in warnings. And what it's saying right now is something governments pray you'll ignore. This is not a prediction. This is a memory, and history is about to repeat. The data came from 3 sources. First, the International Monetary Fund's quarterly reserve disclosures, buried in footnotes. Page 87. Central banks have been buying gold at rates not seen since 1967. Russia, China, India, Singapore, Poland, Turkey, even nations that publicly dismissed gold as a barbarous relic are stockpiling it in silence. The numbers are staggering. In 2023 alone, central banks purchased over 1,000 tons. That's the highest level in 55 years. And 2024? The pace accelerated. Second quarter data showed purchases up another 37%. This isn't cautious diversification. This is panic buying disguised as policy. And here's what makes it terrifying. They're not buying from markets. They're buying from each other. Private transactions. Bilateral deals. Gold moving in the shadows, away from public exchanges, away from price discovery, away from oversight. When institutions start trading in darkness, they're not just being discreet. They're being strategic. Second, satellite imaging of vault expansions. Between 2022 and 2024, 6 countries expanded their gold storage facilities. Not by 20%, but by 300%. Singapore built an entire underground complex beneath its financial district. Poland repatriated 100 tons from the Bank of England and immediately began construction on reinforced storage. China's vault capacity in Shanghai tripled in size. You don't build vaults for assets you don't trust. You build them for assets you know you'll need. And third, the trading anomaly. In March of 2024, something unprecedented happened. Gold futures contracts were liquidated at a loss by Western banks, while Eastern institutions bought them at a premium. A reversal, an inversion. JP Morgan, HSBC, and Deutsche Bank dumped contracts worth billions. At the same time, the People's Bank of China and the Reserve Bank of India were buying, not at market price, but above market price. They were paying more to guarantee delivery. That's not normal. That's not rational. Unless they know something. It's not just movement, it's a migration. As if they know something we've been told to forget, gold doesn't move like this during stability. It moves like this before collapse. This has happened before. In the 3rd century, Rome debased its currency. The denarius, once 95% silver, became less than 5%. Silver coins that once gleamed became dull with copper. The citizens didn't notice at first. Bread still cost the same number of coins. But gold did. Gold left Rome. It flowed to the provinces, to Byzantium, to Persia, to the edges of the empire. And wherever gold went, power followed. By the time the emperors realized what was happening, it was already over. The legions demanded payment in gold, not denarii. Trade collapsed. The empire fragmented. Gold hadn't caused the collapse. It had simply acknowledged it. 15 centuries later, another empire fell. Not to invasion, to debt. After World War II, Britain was victorious, but broke. The war cost them everything. A quarter of their national wealth, gone. The pound sterling, once the world's reserve currency, was dying. And everyone knew it, except the public. The British government insisted the pound was stable. They imposed capital controls. They rationed currency. They lied, but gold knew. Between 1945 and 1949, Britain hemorrhaged gold to the United States. They tried to hide it, denied it in Parliament, called it temporary adjustments, but the vaults don't lie. Britain entered the war with 2,500 tons of gold. By 1950, they had less than 1,500. The rest? Shipped to Fort Knox. Payment for survival. By 1950, the British Empire was a memory. The dollar was king. And then, 21 years later, America did the same thing. August 10th, 1971, President Nixon appeared on television. Interrupted programming. No warning. No preamble. He announced the United States would no longer convert dollars to gold. The gold window, Open since Bretton Woods in 1944, slammed shut. He called it temporary. He called it necessary. He never turned it back on. From that moment, money became a promise, not a thing, a belief. And beliefs are fragile. The world didn't panic immediately. It took time, years, but gold knew. In 1971, gold was $35 an ounce. By 1980, it was $850, a 2,400% increase. Not because gold became more valuable, because the dollar became less real. And there's a pattern here. A pattern that repeats across centuries, across civilizations, across every iteration of human hubris. When empires print, gold leaves. When currencies debase, gold remembers. When trust erodes, gold awakens. It's not superstition, it's mathematics. It's thermodynamics applied to civilization. Gold remembered. It always does. Now we arrive at the present. The pattern is forming again. But this time, it's global. This time there's nowhere left to run. Inflation isn't just high. It's structural, embedded. The money supply expanded by 40% in 2 years. $13 trillion created from nothing. That doesn't evaporate. It lingers, like radiation. It seeps into prices, into wages, into the very fabric of economic reality. And every time a government prints another trillion, gold tightens its grip. Look at the price. In 2019, gold was $1,400 an ounce. Today, it's above $2,000. But that's not the real story. The real story is what's happening beneath the surface. Physical gold, actual bars, actual coins is trading at premiums over paper gold. In some markets, the premium is 5%, in others, 10%. That means people don't trust the paper promises anymore. They want the metal. They want the weight. They want the thing that can't be printed, can't be hacked, can't be inflated away. The Federal Reserve says they have it under control. The European Central Bank says the same. But their actions tell a different story. Interest rates spiked, then paused, then cut, then spiked again. They're improvising, threading a needle between inflation and recession, between stimulus and collapse. And improvisation is not a strategy, it's a symptom. But it's not just inflation. The global monetary order is fracturing. BRICS nations, Brazil, Russia, India, China, South Africa, are settling trade in their own currencies. Yuan for oil, rupees for wheat, gold for everything else, bypassing the dollar entirely. Saudi Arabia, the cornerstone of the petrodollar system since 1974, is accepting non-dollar payments for oil, euros, even digital currencies. That was unthinkable 5 years ago, unmentionable. Now it's routine. The 50-year agreement that made the dollar essential is dissolving, not with an announcement, with a whisper. This is not rebellion, this is preparation. They're building the infrastructure for a world after dollar dominance. After American financial hegemony, after the system that has ruled since 1944. And then there are the digital currencies. Central bank digital currencies, CBDCs, programmable money, traceable, controllable, expirable. China already has one, the digital yuan. Over 200 million users. Europe is building one, the digital euro. Pilot programs in 5 countries. America is researching one, the digital dollar. Federal Reserve papers. Congressional hearings. They're not about convenience. They're about control. Imagine money that expires if you don't spend it. Money that can't be used for certain purchases. Money that tracks every transaction, every movement, every choice. This isn't speculation, it's stated policy. And when control becomes the priority, trust dies. And when trust dies, gold wakes up. China now holds over 2,000 tons of gold in official reserves. Officially, unofficially, estimates run twice that. 4,000 tons hidden in sovereign wealth funds, state banks, private holdings. Russia has been buying every ounce it mines. Banned from SWIFT, sanctioned, isolated, but not poor, because they have gold. And Western banks? They're selling, liquidating, dumping futures contracts, closing vaults, moving away from physical holdings into paper derivatives, into digital abstractions, into promises backed by nothing but other promises. This is the pattern, the exact pattern that preceded Rome's collapse, Britain's decline, the dollar's debasement in 1971. It's happening again, not suddenly, not catastrophically, slowly, quietly, inevitably. And gold is moving to where the power is shifting, east, away from New York, away from London, toward Beijing, toward Moscow, toward Singapore. Not because gold is political, but because gold is memory, and memory follows power. So what does this mean for 2025? It means we are standing at a threshold. On one side, the system as we know it. 70 years of dollar dominance, 50 years of fiat currency, a lifetime of promises. On the other side, something else. Something we haven't seen. A multipolar world competing currencies. Digital control. And gold. Always gold. The leaked data doesn't predict collapse. It reveals preparation for collapse. The smart money isn't waiting for confirmation. They're not waiting for headlines. They're moving now. In silence, in shadow. Central banks don't hoard gold because they're paranoid. They hoard it because they're informed. They see the debt, 34 trillion in America alone. They see the deficits, 2 trillion per year. They see the unfunded liabilities, Social Security, Medicare, pensions, promises that cannot be kept. And they're hedging, not with press releases, with action. Gold is not an investment. It's not a commodity. It's a witness. It has watched empires rise and fall for 5,000 years. It has outlasted every currency, every king, every revolution. It survived Rome. It survived Britain. It survived the gold standard. It survived Nixon, and it's watching now. Watching the same patterns emerge, the same desperation, the same denial. The question is not whether the system will break. Systems always break. The question is whether you'll see it coming. Whether you'll recognize the signals while there's still time. Because by the time the collapse is announced, it's already over. By the time it's on the news, the smart money is already gone. The vaults are already empty. The gold is already elsewhere. History doesn't scream, it whispers, and gold is the whisper. It whispers to those who are paying attention. To those who understand that every fiat currency in history has eventually failed. That every empire that debased its money eventually fell. That every system built on infinite growth in a finite world eventually collapses under its own weight. This is not doom. This is reality. This is the cycle, and we are in it. Right now, gold doesn't predict collapse, it remembers it. And it's remembering again.